Welcome back to Startup Street. Funding for startups will rebound in the second half of 2024. That's the word coming in from investors who had gathered at the recently held TiEcon 2024 in New Delhi to discuss the road ahead for the Indian startup ecosystem, which is emerging from a tough two-year period. Is a funding spring right around the corner? Akhil Vishwanath finds out. Take a look.
For the last 2 years, the proverbial funding winter has gripped the Indian startup ecosystem. If 2022 tested resilience, 2023 questioned survival for many startups as funding plummeted to a 6-year low. There were signs of spring in the somewhat dim year as December turned out to be the best month with $1.8 billion worth of investments. But funding in January and February has struggled to keep pace. I'm at TiEcon 2024, where the Indian startup ecosystem has gathered to discuss the road ahead. So let's go meet up with some investors and find out if spring is right around the corner.
There are two major events which people are waiting to happen. One is the elections this year. And people question why elections are an important event, because a lot of dollar capital, 85% of capital in India ecosystem is dollar. The second one is the interest rates. So I think even though Fed gave the indication that they may not immediately change interest rate, but I think chances are that by June, July, you will start seeing softening of interest rates. So therefore, people will open up their wallets and start putting more money. So second half of the year, you will see more capital flowing into startup ecosystem.
The next wave of listing, is probably should start happening by the end of this year. And I think once, the growth stage companies start giving exits to larger institutions, I think the trickle-down effect will sort of ease out a lot of things at Series A, Series B levels.
As a business now, while you could wait until the $5 billion mark to go profitable, now you have to plan for capital efficiency, profitability much earlier at a $250 million or a $100 million mark, right? That's where investors now start expecting for you to build a sustainable business and presume no capital is available.
It is all fixed valuations, so they know that investors are not going to bet on the future performance. They're going to look at what they have achieved till now, and that is something which the founders have accepted. So in terms of we making an effort to bring them down on valuations, it is not much. I think they are asking for reasonable valuations now.
Deep tech is seeing a lot of interest because these are businesses that are more defensible at this point and have more long-term attraction.
Deep tech is becoming hotter and hotter, and specifically generative AI applications across different sectors. Financial services, fintech and insurance are these two sectors which are taking off in a big way. And of course, we are also seeing health tech taking off very soon. It hasn't happened yet in the way we were expecting.
We have been very active in the consumer tech, so we certainly are sold on that. The other is definitely enterprise SaaS and fintech.
I think EV and the whole clean tech ecosystem, that's a sector that has to be watched out for, and I think it's an absolute need of the hour. It's not seen any funding winter of any sorts in the last 2 to 3 years. I think the second sector is the whole rural commerce and commerce beyond urban. That's one other sector, because the Indian consumption story is still on the rise, and the consumption is yet to sort of penetrate outside of tier 1 cities and at best at tier 2 cities. So I think that's another sector to watch out for.
Well, that's a whole host of sectors investors